Titan is in a very unique industry. Now, I'm pretty sure most of us wear glasses, we wear fashion clothes, Indian dress wear, we wear, let's say, watches, and in all of these industries, Titan is involved. And this industry is called as a lifestyle industry. So Titan primarily focuses on the Indian market, and it is slowly expanding globally as well. So let's go on to the GIC model. Now, what is the GIC model? It's a framework for fundamental analysis where you focus on the global economy, the local economy, the industry, and the company. And these are assumed to be the factors that cover up all the uh, reason for the valuation of a particular company. So let's start with the global economy. After COVID 19 happened, there was a big turmoil globally. Investments reduced, unemployment increased, people's consumer spending decreased. However, over the past few years, past few months especially, it has been picking up, as we can see from the US inflation rate, which sets the target for the global economy as such. And we can also see from the US interest rate, they are trying to combat inflation, hence, they have increased the interest rate as well. So, we can say that the global economy is reverting to pre COVID times. Now, let's look at the local economy, that is India. So, in the local economy analysis, we're going to be using the pest analysis framework and also the SWOT analysis framework. So, in the pest analysis, we're going to be first starting with the political aspects. So, we had initially made this presentation to be over 40 minutes. Since we're going to be shortening the presentation, I won't focus too much. But in summary, India does not have the best electoral democracy index, meaning this shows how good, or say how free a democracy actually is in choosing its leaders. And as you can see, India is ranking third last in this subset of countries. So we've chosen, for all the analysis that's following up, we've chosen US, Europe or UK, Sri Lanka, India, Pakistan and Bangladesh, because we believe this will give a good comparison for neighborhood countries and also global, developed countries. So we can see health expenditure as well. India is not performing the best. However, education spending, India has been one of the top countries globally. So India is going towards a more progressive aspect. And now let's look at taxation. So regarding companies that you invest in, especially for Titan, since it involves in luxury goods, there is a GST of 28%. And regarding the corporate tax, Titan comes under the turnover of less than or equal to 4 billion and between 10 million and 100 million income, due to which Titan incurs a corporate tax of around 31.2%. Now, regarding capital gains tax that you will incur as an investor, is that if you invest in the short term, you have a 15% tax regardless of how much ever gain you make. And in the long term, if your gain is less than or equal to 1 lakh rupees, then you do not have any taxation. However, if you make a long term gain of more than 1 lakh, then you have a taxation of 10% on your gain. Now let's look at the economy. As you can see, India's GDP per capita over the past few years has increased a lot. It does not look very evident in this graph. So let's look at the change in the GDP per capita. As you can see, India and China are on par while other countries are not doing that great. So India, China and Bangladesh as well has recently made a lot of improvement. So we can conclude that India has had a lot of economic growth. Now, if you look at the inflation rate as well, during COVID, there was a steep increase in the inflation, but again, it's stabilizing similar to the US economy and the global economy as a whole.
Ahmed,
Yes.
are you recording this presentation?
Yes, sir.
Yeah, I need it. Okay, so continue, and then I need this recording of the
Okay.
presentation.
Thank you. All right. So that was regarding inflation. Now, if you look at interest rate has also increased a lot, meaning India is now set on having this inflation as the target for a foreseeable future, because they want to maintain this going forward, as we have gone away from the pre-COVID, gone away from the COVID times, and we're going reverting to the pre-COVID times. As you can see, during COVID, there was a very large decrease in the interest rate to encourage people to increase consumer spending. However, it has gone back to pre-COVID rates. Now, household expenditure over the past decade has actually more than doubled over the past decade in India in both urban and rural areas, meaning the purchasing power and also the purchasing habits of Indian citizens and residents in general have increased. Now, why is this important? I'll come back to that later. Now, let's look at the social aspects. Now, India's population has boomed, especially over the past few decades. And since 2000, it has increased dramatically. And the main thing is how the working population, that is 25 to 64 uh, ages, have increased dramatically. Now, what is the advantage of this? We'll come back to that in the SWOT analysis. So as you can see, from if you let's look at the overall distribution of the population age groups, the working population has increased the most. Now, can you see ages 65 plus is slowly increasing? Now that also we'll look at in the SWOT analysis. What is the implication of that? And now India's fertility rate is actually decreasing, which means that the population is going to stabilize. This is a sign of of a country that is transitioning from developing to developed. Uh, One thing that India struggles is that it does not have the most optimal gender development index. So there is a disparity between men and women, unfortunately, and we'll come to that implication as well. Regarding technological advances, the number of R&D researchers in India also is not very ideal. As you can see, we are lagging greatly behind US and Europe and even China, and we are on par with Pakistan, India, and Pakistan and Sri Lanka, which is not the most ideal. Hence, this is also seen in the investment that is made by the government, which is also not the most ideal. As you can see, China has made severe improvement in its investment. Now let's look at the SWOT analysis from the building upon this pest analysis. So first thing is that the strengths would be that we have a relatively stable governance compared to our neighbors especially. We have a young and motivated workforce. Now what are the weaknesses? We can say that we have slightly reserved social norms, lack of entrepreneurial support, and suboptimal research quantity. Of course, the quality of Indian research is amazing, but the quantity we still need to improve. Hence, as you could see from the investment and also the number of researchers per capita was not the most ideal. What could be the opportunities? We have a very large population. There's a big upcoming working youth, and also with better gender parity in the future, we'll have even larger workforce and maybe even more research quality and quantity. Regarding threats, the suboptimal utilization of this young population in the next few decades could be disastrous because we have a large population. If they are unemployed and do not have something better to do, then there could be protests and political unrest, which is not the most ideal. So this could be a threat in the future. So now let's look at the industry. As I told you, Titan is part of the lifestyle industry. Lifestyle industry is currently at an expansion phase in India, especially with a compounding annual growth rate of 10.84%. So it has a very large market revenue, which is projected to increase to $86.8 million by 2027. And the main drivers for this is the large population growth, especially the increased GDP per capita and the youth spending, which is also seen by what I have shown you regarding the consumer spending index. Now, what could be the threats for this industry is that it is the lifestyle industry is majoritarily, it's not a, what do you say, it's not a necessary good, it's a luxury good, meaning it is highly dependent on consumer sentiment and non-essential spending habits. Meaning, if there is any situation like the pandemic, then the consumer sentiment will worsen, and obviously the spending habits related to lifestyle industry will decrease because you will be focusing on saving and not purchasing new clothes or new eyewear or new jewelry. Now, what could be the barriers, which is actually good for Titan? It is that there's a high barrier of entry, so large investments are required to compete with Titan. I did not add this to the slide because of time constraints, but if you see, and I can add it, let's say after the presentation, I can comment on it. Titan has a very large market share, which is mainly because of the, let's say, big power that Titan has because large investments are required to compete at this high level in the lifestyle industry. So now let's look at the company as such. Now I'll be focusing on the qualitative aspects, and the quantitative aspects will be taken forward by Bhavya and Dheeraj. Let's look at the qualitative aspects. So wait, just to confirm, everybody is aware. Qualitative means we are not going to be focusing very much on the numbers. We'll only be looking at the subjective aspects, while the quantitative aspects will be focusing on the valuation of the company as such. So a few key figures for the company is that they have a very large market cap, they have high revenue and a lot of employees, and they have a very large presence in India, and but not the most ideal presence globally. We can see that they only have 14 stores, and that too in GCC only, and also only in the US. But as I will come to that in the future aspect, where they are expanding to more countries. Now, competitive strength is that they have a strong brand. They are very much focused on innovation, which is especially seen very clearly in their uh, company annual report, where they focus a lot on R&D and D and innovation. They have very good corporate governance, and they have very good brand portfolio diversification. Even though all of their brands come under lifestyle industry, they are not just focused on a very particular, let's say, market segment. They're focusing on eyewear, they're focusing on watches, they were focusing on wearables. So these are all independent, different market segments. So this kind of gives a diversification and reduces the risk as well. So these are the all the brands, but I will have to skip this due to time constraint. But as you can see, mainly the main takeaway from this slide is that they are focused all over different market segments, from luxury, premium, mid market, and as well as mass market. Now, let's look at their leadership. They have very good management, and their CEO currently is Venkataraman, who was previously in Tata Group, and now in his past 4 years as CEO of Titan Company, they have doubled their revenue. Secondly, they have a very diverse board from different backgrounds, which gives them a strategic advantage. And also, they are backed by Tata Group. If you look at the shareholder pattern, majority is from the initial promoters, which is the Tata Group, and also the Tamil Nadu investment group. I forgot the exact name, I apologize, but they're backed by the Tamil Nadu investment group. So FII stands for foreign investment, DII stands for domestic investment, and there's some public investment as well, and few others, there's miscellaneous. So what is their commitment to innovation that can be shown by their R&D centers all over India for all divisions that focus on innovating their products and also improving their processes. Secondly, they have research collaboration, which is especially seen in IIT Madras, which focus on improving the sparkle and finishing of their jewelry products. And they also have a aspect of Kaizen, that is continuous improvement, so that they're always ahead of trends and evolving consumer needs. Now, the quantitative aspects will be taken forward by Dheeraj.
Uh, Hi, sir. Like, because the time constraint.
Dheeraj, actually, this class is gonna end like because it was just for a 50-minute lecture. But I want to listen. I want to ask you people how many are gonna be there, like how many people don't have any further class, because I want you people to continue this presentation if you do not have any further engagement, because I want to listen to you.
Sir, I don't have anything.
We don't have class.
Sir, I have class, sir.
Said Abdullah has class. Okay, what about other people, like especially the group which is presenting? Do you have any class?
No, sir.
Sir, otherwise so there was no class, but there is a guest lecture today for compiler construction.
Okay. So do one thing. Whoever wants to go, they can leave the presentation. I want you people, especially the presenting group, to continue. Okay, and I'm here to listen this presentation, and I'm listening it. Literally, I'm listening it. Okay, it's very interesting.
Thank you.
Okay, other people can leave the presentation. I mean, based on their other engagement, they can leave the presentation. Thank you. Please, Dheeraj, continue.
Yes, sir. So, as you can see, the price of the Titan company as of today was, sir, it's around 3,400. It's just increased. Like the screenshot is saying 3,383, but it has increased by 2% today. So, So, when I did the quantitative analysis book value method, I found out that book value was just 105.8. So, if we compare that valuation to the actual market value, uh, we can see, sir, that it's very, very high, sir. Like, there's no comparison only. So, I was pretty shocked to know that at first. But uh, as I saw, sir, book value only captures the value that is there in the balance sheet. And market value, we'll also get to know the sentiment that the investors are having. Like, uh, because, sir, because this company Titan, it has such a good brand value.
You
Even
you are
in
you are very correct, Dheeraj, and even you showed this number to me, and I was wondering like how is it possible, because whatever the kind of analysis so
yes,
far
sir,
I
I
have,
asked
I
you when it
haven't
happened.
come across this kind of company, and you are very true. And let me add you to your explanation. The one thing what you have explained, that book value is something which is a kind like already the kind of capitalized value of the business,
Yes.
but the market value is something which also incorporate investor sentiment about the future benefits. So you are correct that yeah, there should be a difference. Now let me add something more, especially about the Titan company. Titan company is something which is into jewelry, which is into different kind of other, fashion item and something else. Now, because it has a direct link to gold jewelry, it also works as a substitute, as a kind of like an hedging opportunity. So like it's a part of stock market, still it provides a kind of an hedging opportunity to make investment in Titan. That's why you'll always see the price of company those are into gold jewelry will be little higher. And even when the whole market will be like, it will be in a kind of turmoil, these prices or these companies will be affected least, or sometime they will be showing a better performance because they work like as a hedger.
Yes, sir, that I was going to explain, sir, but you did wonderfully, sir. Thank you.
I'm sorry if I have
No, sir, it's fine. It's fine. I
please
think
continue.
you explained better than me. So, yeah, sir, I was getting to the point that we can see such a big difference in the market value and this book value because two, three factors are there. So one that you've already mentioned, and also the company's brand value is too high. So, like, if you see their mid-sector watch market, also they have companies like Fast Track and Sonata, which everyone trusts. Like, we know, sir, those kind of brands, like everyone will go and buy. So investors will see value in that. Also, so can I share my Excel sheet?
Yeah, please go ahead, go
Uh,
ahead.
yes, sir. One thing. No, can you just for some time just don't present? I'll show the Excel sheet. So can I continue? If you can see the screen.
Yeah, we can see.
Okay. Sir, so if you see, sir, the CAPM model also, this all this information I've taken from Alpha Spread. It's a website, so we can see that the beta value is only 0.8, which suggests that it's a very low risk company compared to the market. Also, it's less than 1. Uh, and total cost of equity is 10.766%. And when I calculated the return on equity, the return on equity, sir, it came out to be 37%, which is much bigger compared to the cost of equity. So we can say that the investors are getting more value than what they're expecting, because this value 10.766% is expected. And actually, if you see the return on equity, it's 37%, and which is comparatively very higher to the market average. Also, the market average is like 15%. So maybe that also is a reason. And now I'd like Thahir to start presenting again. Yeah, thank you. So
you can move on to the next slide.
Next. Sure, and this is the free cash flow model. So this basically saying it has a pretty good valuation, sir, 1,211. But compared to the market price, it's still very less. But seeing the cash flows, I think that market value is already very overblown. So I think it's a little overvaluated company. But I'd like Bhavya to continue from here to show the other analysis.
Yeah, sure. Can move on to the next slide. Okay, so the no growth dividend discount model, in which we take the current dividend and we can use the CAPM model calculated cost of equity or an expert calculated value that is from the WACC model. We get share valuation of only 102 rupees. So this means that the current market price is 30x of this equity valuation. But this does not do it justice, because when you see their retention ratio, they have moved on from in the past 5 years. They have gone from around 40 to 50% to over 80% of retention. So this says that they are not paying out dividends in the proportion they used to, and it's a very high growth. So their value is not seen in the dividends they're giving out, but in the capital appreciation. So moving on to the constant growth dividend discount model, this gives a closer estimate to the actual market value, but still it's very far off. So here we here we have calculated the growth of the dividends as around 10% from year on year, from 23 March to 24 March of the past 12 months, and our two values of KE, that is a kappa model and the WACC calculated KE values, and the dividends, from which we get a share price of around 1,500. So this is almost like half of the current market value, which says that the investor sentiment is like really prevailing in this market. And I would like to add one point to what Sir had explained. So since these past 5 years or so have been a lot of turmoil with the COVID pandemic, then the Russia's invasion of Ukraine, and furthermore, recent news of the Iran president had passed away in a helicopter crash. This also leads to a lot of Middle East turmoil. All of this in turn increases the tangible assets that people want to hold. And as Sir said, this serves as a substitute for the gold market. So people are directly holding these as a store of value. So that has been seen in their rise in share price. Yeah. Okay. Moving on to the earnings multiplier. Oh yeah, you can go next. Earnings multiplier approach. So we get the P ratio of the industry as around 55, and when we multiply our earnings per share with the industry P ratio, we get 2,232 rupees of share valuation, which is still closer to 3,000 compared to the no growth model, but way off. So this is the standard I would like to set. If you were to buy in, despite the overvaluation, this would be your limit order. And to conclude, all our traditional and modern equity valuation measures suggest high overvaluation. Even the PEG ratio is over 3. So that says a direct sell, but we would say look to sell, not sell, as this is a very high growth company. They have ventured into jewelry and a couple other verticals. And since the global economy is going back to homeostasis, is going back to where it was pre-COVID, people are holding on to physical, tangible assets even more. This serves as a substitute for gold. So all of that being taken into consideration, we would say, despite the overvaluation, we can say this as a limit order, and it has provided a great return on equity. So yeah.
Sir, I wanted to add one point that
Yeah,
this
please.
is not a growth stock, sir. So it's a value stock, so it'll be pretty stable. Its market share also across different businesses is pretty high. Like for watch business, it has 45% in India. So for a stable investment, it's a good option, but the price should be near the value that Bhavya said.
Yeah, and one more number I wanted to mention. Like as of now, they have 6% market share in the jewelry business, and that's only in India. And the industry is close to 85 billion USD as of last year, and it's projected to grow at 5.7% CAGR till 2030. So as Dheeraj mentioned, it's a value stock. So yeah, Thahir can conclude the future strategies.
Okay, sure. So, if you are wondering why there is a disparity between my CAGR that I had mentioned and what Bhavya mentioned, he is specifically talking about the jewelry industry. I had previously talked about the lifestyle industry as a whole. So, just to reassure you that there is no disparity. So, regarding the future strategies for Titan, they are focusing on expanding, especially globally. They are focusing on improving their growth in terms of revenue, and they are focusing on becoming a 1 lakh crore rupee business in the next 5 years. To accommodate all of this, they are focusing on improving their workforce, and they are adding over 3,000 skilled employees over the next few years to achieve this goal. To conclude, Titan does have a great future ahead. They have diversified growth, they have an innovative mindset, and they have a very ethical governance. Due to this, the conclusion for you as potential investors in Titan is that because of its strong performance, diversified brand portfolio, and despite high overvaluation, it has high ROE. We say invest because of the long term returns and long term benefits that you obtain. Hence, we advise you to add this company to your portfolio. Thank you.